He's a constant rant.
I'll just kick off. I'm kind of hoping to not take the hour, but I do have till 5:30 apparently. So,
Yes, for you.
so this is effectively the last part of the districtisation process. You districtised activities in September last year. It took effect from 1 July this year. So now all of the funding for all of those activities that were previously ward funded are now funded from the district, which means that there are certain reserves and internal loans that sit at ward level that we need to deal with, because removing the income stream from the relevant reserves, we don't even have some of the same rates now that we had when these were created, means that we would potentially never get to deal with the deficits that are sitting there. So if we go to the next page, Wayne, it'll just be a quick recap on what reserves are and why do we have them. So they're created to ensure funds received for a particular purpose or any surpluses generated through any activity are held for use for that purpose or activity. That's why we have reserves with different names. It ring fences the revenue received and surpluses generated for the purposes of the reserves, and they can be nature general, targeted, specific or other. I'll deal with specific reserves and other reserves. We get them out of the way. We don't even have to talk about them again because they are special types. So if you move on to the next one, Wayne. So specific reserve is a reserve that's created specifically for a purpose, e.g. the MacArthur Book Committee or the Anderson Trust Facilities and the A. George Trust. Usually they come about via a bequest, and that bequest will have specific rules around it. So to accept the money, you accept the rules, and that's what you deal with. So we won't be dealing with specific reserves going forward. You also have other reserves that in the Chatto Creek, Clyde and Omakau Reserves Committee, as well as the Torrey Lake Reserves Committee. Again, they are only available for the purposes specified, so we will not be looking at those reserves either.
The Anderson Trust, that's Cecil Anderson Trust in Cromwell.
Yeah,
I hope so, because it's kind of important.
Yep.
Yeah, I hope it is.
I'd have to. That's what we've listed it in the annual report. So
if we've dropped the Cecil Anderson part, I just think it's probably just the right names for these things.
Yeah, no, that's probably just an import who's only been here a year.
Yep.
So if we move on to the next one, the general reserves. So general reserves are created from funding and surpluses from activities funded from either the general rate or the uniform annual general charge. Currently, we have separate reserves for the general rate and a separate reserve for the UAGC because they used to fund different things prior to the revenue and financing policy changes that we made. They are both general reserves. Putting them in the same bucket effectively gives you more levers, and I've talked about that in the past. So we haven't differentiated in the revenue and financing policy between these activities that are funded by either of these. So it used to be things like the elected members' costs were funded out of the UAGC. Roading is funded out of the general rate. So what we've done is we've said that UAGC and the general rate, there's no difference. They are levied generally. They're just two different components of the same rate. Therefore, they can fund all of the general type stuff. So the proposal is we just combine those into one general reserve, and it's easier to maintain and manage there. There's no need to separate the two because they don't fund anything separately. Move on to the next one, Wayne. Thank you. So we're now talking about targeted reserves. And these targeted reserves are reserves funding activities via a targeted rate. They tend to be district-wide, and they're only available to be used for the specific activities. Some activities may be funded from the same rate. So you may have noticed that our people in our P&C charge, our culture charge that we had was funding many different activities, right? So District Works, for argument's sake, funded public toilets and unsubsidised roading. So those, because they're coming from the same funding source, they could be combined. That's what we've done in the past. Happy to take questions as I go through it too, if you want to ask them. So then, next one, Wayne, thanks. So then we move to ward targeted rates, reserve, sorry. And these are similar to targeted reserves, except they're funded at ward level. So that was back in pre-districtisation. You'd have a whole bunch of activities that were funded at ward level. They would have a targeted rate. That's where the reserves were created. Again, the source of the funds determines the grouping of the reserves and how those reserves can be used going forward. So there was a level of complexity with the introduction of the rate harmonisation. I'm trying to move away from districtisation because it keeps coming up with a spelling error on everything that I do. So
you just need to click learn word.
Still not a word though, is it? So the rate harmonisation across the district for most of the activities funded through targeted ward targeted rates. The effect of harmonisation is going to effectively strand reserves because they will have no more income going into them of the source that they had going into them prior to that harmonisation. So effectively, they were funded through a ward targeted rate. They're now funded through a district rate. So it's a different bunch of people potentially paying the rate. So recreation and culture activities, parks and reserves, swimming pools are now funded together. Previously, they were funded at ward level, and in some cases, as in Roxburgh, they were funded by grant rather than a pool rate. But now we fund them through community facilities. Have the next one, thanks, Wayne. So we also have a thing called internal loans. Now, internal loans are effectively a method of funding a project that defines a project cost, uses current reserves to fund the project, and sets a rating level to replenish the reserve within a governance group. So it's not really a loan if it's within the governance group. And I defined a governance group as a community board area or a ward. So they could at that time govern how they spent their money. So that's what a governance group is. So effectively you're taking money out of your one pocket and putting in the other, but it's the same pair of trousers, I guess, if you like, that you were doing that with. So it was also used to fund projects between governance groups. So there are about 6 projects in internal loans that were funded either via the district or Cromwell to other communities.
So how do they roll on now? Because the Minnetonka to the Minnetonka.
I've got an answer for you.
Have you got an answer for me?
Slow down.
Shows how sharp I am today, the head of the game.
Not really.
So most loans were made up where the lender and the borrower were from the same governance group, i.e. Maniatoto lending to Maniatoto projects. And there was 4.09 million of internal loans. 2.848 million of those were lent by a governance group to itself. Okay. And have the next one, please. So here's the issues paper, I guess. Reserves and internal loans that were either created via targeted ward rates or rely on targeted ward rates for repayment could become stranded. So they can't be used for any other activities other than those which they were created for, and this is due to the rates harmonisation. So it was always going to be a 2-part process to get this thing sorted. Deficit reserves and internal loans cannot easily be returned to nil where they should be by the communities that created them via rates, as the targeted rate no longer exists, is no longer being levied by the communities, and could be seen as being unfair if the ratepayers of the other community board areas have to pay via district rates for past deficits of the previous community boards.
That's a cost. That's a cost of district-wide funding though, yeah?
Well, was that considered at the time?
It was. That's the whole reason why we joined it.
I don't remember when I was going through the district-wide funding whether reserves or deficits, with the exception of one group, which was the Cromwell Memorial Hall, was previously decided to be funded out of land sales. And that was, if I remember correctly, that was decided that that would continue to be funded out of land sales.
Yep.
So that's the exception.
I think we talked about where community boards sit in
Yes.
terms of were they in deficit or were they in credit, and I think we're kind of in credit, but nobody
Overall,
really
yeah.
talked about the wash up of
Yeah.
what that.
So this is the wash up.
To the wash up, we didn't read,
Yeah.
it wasn't talked about.
So the question then is, how do we eliminate the deficit targeted rates, targeted reserves and the internal loans? And how do we utilise those reserves that are in surplus? Because you need to have a methodology of, you've got a surplus, what are you going to do with it? Otherwise, it's just going to be money sitting there doing nothing and not being useful for anything. And the question is then, is it possible to ensure that reserves are ring fenced and financial consequences remain with the appropriate governance group, i.e. district funds are not used to eliminate community board deficits if possible? And a governance group is a community board, or the council itself, they are governance groups because the district has lent money to other areas. And how can we eliminate internal loans appropriately to ensure loans between governing bodies are dealt with so that the governing body who lent the money gets the money back? Because I guess that would be a prerequisite here, is that if Cromwell, for argument's sake, I think they've lent about $1.1 million to other activities, Cromwell would want that back in its reserves because it lent those.
Not Cromwell's anymore though.
Well, technically at that time, it is, because it was levied
It's about the wash up.
by.
Yeah.
But you talk about the wash up of the past, but going forward, of endowment land, is there still not do you still not need a mechanism for internal loans?
No, there's no benefit for internal loans with a district-wide funding mechanism.
The endowment land in Cromwell, which is an endowment for the Beta Borough funds, could loan money
Yeah.
That's what I'm saying.
to the council.
Yeah.
And to another
Well,
board.
no, it's basically to the council these days.
To the council now.
Yeah, and that's how that money in the Ada Borough funds will be getting interest going into that account to build
So
up
if
cash.
you think that through, the interest would be charged to the council,
Yes,
rate the district
yes,
for the interest.
Yep.
Including Cromwell. So Cromwell would not only lend the money, they'd be paying interest on the money they've lent.
yeah, so,
They would be earning money back, absolutely agree with that. It just doesn't fit in terms of the endowment
Only on endowment land.
land. Yeah.
Only.
and only on the interest component.
Of the endowment.
Everything
Cromwell paying it
else,
twice, yeah.
everything else has been made district wide. So effectively by doing that, you have, you've effectively turned around and says, we don't need to have these little pockets of money or overspends. We have to deal with them because the district from now on, from 1 July, is going to be funding the activity and or collecting a reserve for those activities into the future. So the stuff that's happened in the past is the past. We can't transfer and say, okay, well, all of the surpluses, which I don't think the council would want to do, and the community boards definitely want to do, all of the surpluses get transferred into the new council district reserve, and the council pay off all of the deficits. That probably wouldn't fly, I think.
Who would?
But isn't that happening now with
Yeah. Who wouldn't have flown
No,
it?
no, because you've got a whole bunch of reserves that are potentially in surplus, some of them, and some are in deficit. So I get, well, I don't know what you're gonna,
Well,
Well, maybe we should see the figures.
Let's
and
go,
numbers,
okay.
examples, and then we can actually have a,
because I've got a theory of
case
it.
in point, you know.
so can we move on to the next one?
Sure.
Next one.
Yeah,
See
yeah.
numbers.
Okay, that's,
Yeah.
that table,
Bigger
they've
point.
got copies of it. You've got internal loans at 30 June 2025 are about 4.09 million. You can see I've put the lender on the left-hand side, where they took it from, who they've lent it to, and what it was for, and the amount at 2025. So you can see Cromwell has lent 1.084 million to 3 activities, 2 in the district and 1 in Vince. The district has lent 3 activities to other places, so 3 in Vincent, and it's transferred money from one reserve to another reserve effectively for the airport. Maniatoto has done the same. They've lent from their general reserve to 3 reserves within their area, so the milk bar, the store at Naseby, and the hospital. Teviot lent 223,000 to itself for Roxburgh Pool, and that's where I think the confusion has come about, where we talk about loans. They're not actually loans, they're just transfers from one reserve to another to fund something. And what we're actually then saying is we were going to rate our ratepayers to replenish the reserve. There was no effective loan. The only loans that you could talk about are the first 6 as loans between entities, if you like to call the community boards and the district an entity. It's probably an easy way to think about it.
Isn't it one? I mean, with the Memorial Hall, Cromwell Memorial Hall, that's being funded. I'm not sure because there wasn't enough money in Cromwell, so that's not on here.
No, that's next. This is only dealing with the loans, internal loans. The reserve balances are coming next. And then Vincent gave money to the 3, you know, the town centre, the pool, and the ice and line roof upgrade. So that's your 4.92 million. Of that 4.92, if you go to the next one, Wayne. No, that's not the one I want. Did we go too far? There should be another one.
Number 11.
Internal loans continued.
Internal loans continued, yeah.
Keep going.
I don't know what happened there.
Yeah.
Let's say 2.848 at the bottom.
Yeah.
Those are the internal loans. Thanks, Wayne. Those are the internal loans that have been lent by governing bodies to themselves. So you can see that of the 4.09 million, 2.84 million of that is just shuffling money from one reserve to another one, not between Cromwell and where it's sent its money, or the district and where it's sent its money. So if we look at the first one is, I am recommending that those loans there, the 2.848 million, just get written off. There's an entry in our books. One's a liability, one's an asset. We just write them off because they're you can't get them repaid going forward, because you can't, unless you move to a differential to levy rates on the community that have the loan. You can't do it under districtisation.
All you've done there with those are just money that the water's spent, funded from its own buckets.
Yes,
And so it has no effect on them.
correct.
The money's not
Correct.
there anyway currently. You would have spent it on something, but we decided when we did it to say, we've got to get it out of the right bucket.
Yep.
And now actually the buckets don't matter anymore.
Correct.
So there's nothing to be gained by doing anything more than doing exactly what you're saying. Just
Correct.
repay them has no effect at all because you haven't got the money, you've already spent it.
Yep.
And you're not going to rate to put it back anymore,
Correct. Yeah.
which is that would be the dumb thing to do. You're going to rate, otherwise you'd be rating to put it back, which is what the plan was and why you loaned it in the first place, but put it back into something that there's district funding's come in, you
Yes.
can't use anyway. So
So like the Maniatoto Hospital, they will still owe the council rather than the community board
yeah,
rate.
because can we go back to that slide?
Yep.
The previous slide.
And the income,
So the ones that aren't included is the Cromwell loan to public toilets and the Cromwell loan to the Alex Town Centre and the Cromwell loan to the water. They're not included in what you're talking about because that's going to be
Correct. The first six
slide. Yeah, first six.
are not included in this
Yeah,
process.
and all the rest. Yep.
all the rest
To
of
start.
It is the first six. Yeah, sorry, I have myself going not the first six of the next one, but it's not. It's first six. Yeah, so that makes perfect sense.
Yep. Okay, do you have?
So no, I'm just saying that Minnetonka Hospital we lent money to and leased our farms of district-wide funding, those farms have now gone into the district pot.
Correct.
That loan payment down from the ratepayer is written off.
So
They'll still be paying a rate to Central Otago District Council on that loan.
there's two components to the hospital. The interest component is paid for from, Donna's probably, she's listening, she'll correct me if I'm wrong. It's either the interest is paid for from the farm lease and the rates of the principal would have been paid from rates. So effectively it's the same situation as the Roxburgh Hall, the Roxburgh Pool, where we are levying a rate to top up a reserve. It's not actually, my understanding is it's not a loan where you've got a mortgage or a loan document. The council gave money to the hospital with a view that it would recoup $1.5 million from its ratepayers.
Including
So
the
effectively-
lease of the farm.
Yes, there's no difference. And you're right, the interest is covered by the farm. So the income from the farm would still come in. That would go into a district
Fund.
bucket. No different to mining royalties is a good example. We have mining royalties in Miller's Flat area that are going into a district space. If we ever get the other one sorted, that will also go into a district space and it will be for the benefit of the district rather than the ward. So Councillor Gillespie is exactly right. We're just writing this off because it's just effectively a paper entry. There's no impact on the community board ratepayers who we were previously rating.
Just can you just go through that list and say which ones are going to be written off, just so it's quite clear.
The first ones that are going to be written off are from the first three. So that's Cromwell. No, sorry. They
Starts
start.
Alexandra
We've got
Airport, starts Alexandra Airport, doesn't it?
So number 7, yeah.
It starts Alexandra Airport and then Minnetonka Hospital, because that's to an external organisation, isn't it? So that's not written off, is it?
Yeah, because there's no effective loan. What we have done.
There is no loan to Minnetonka Hospital.
No, we've created a reserve.
Yep, sorry. Thank
A
you.
deficit. So we funded the hospital.
Yep.
We put that funding in a deficit, and then we are asking our ratepayers to replenish that deficit.
Now we're saying you're not going to replenish it.
Now we're not going to say that because the district can't deal with it, and we can't deal with it at
Understand.
local.
The rest of my, so it's the first 6 stay the way they are. They've got to be dealt with.
Well,
The rest-
I've got a
Yeah.
plan to do it.
Go on to.
Well, I'm going to pay back anyway.
I've got a question here. Well, I 100% completely understand that. What I do have a problem with is that when we went to the community for all of these things, when these decisions were made, they were made with rules around them for repayment. And that, while I get it, I'm wondering if there's any legal liability here, and I'm wondering if you've had any discussions with
These things
Duncan about that.
These things didn't go to the community. These were decisions of council how to fund things and the boards that didn't involve going to rates.
No, not the ice and line roofing. Okay, that came to community board. So that was all something that actually came very, very publicly.
Yes, and that one for the loan from them was to be repaid by the savings in electricity, wasn't it, from memory? Yeah, so there's no impact to ratepayers on it.
No, and I understand all that, but what I'm saying, is there any legal implications of us making decisions about writing it off? That's all.
Fair question, but I can't imagine there is. Sorry, I think
As far as I understand the process, and this came to light when we looked at Teviot in the swimming pool. What has happened is the hospital have said, or the community have said, it would be really good to fund the hospital. We funded the hospital. We now have a hospital there. They've got their money. What we have done is we have taken it out of, in this particular case, the Maniapoto General Reserve when we did it. We have said, here you go, hospital, here's the money. But we are going to create a deficit reserve for the repayments from our own ratepayers to pay back into, to replenish that cash pot for the Maniapoto. So my understanding, and I haven't talked to Duncan admittedly, but the issue would have been, should we put money into the hospital as the main question, which we did, and we've done that. How we fund that is a matter for the council to deal with. It could have said, we'll just give them $1.5 million and that's it, done deal. It would have come out of the Maniapoto General Reserve.
It did.
And we wouldn't have created this internal loan thing going on. And we would have just said, here's the money. And that would have been the end of it. But what we have done is we have said we need to keep a record of what we put into the hospital, and we would like the money to be replenished back into the reserves. So we are going to levy a rate to do that.
Did we levy a rate?
We have done in the past.
So the rate should go down.
And the farm income paid for the other part.
Yeah.
So effectively, by this is just a paper transaction effectively from our side. If we say let's write that off, we then have the farm income that we can
Comes into general rates.
to do something that comes into the general rate, and we are not rating the Maniapoto ratepayers specifically for the hospital repayment.
And I get all that, but what I'm just saying is there's I feel like there's a link here that we are missing. And maybe it's just me, but I, like, for example, you know, any of one of those things, at that time that they became an internal loan, would you have given another group? I mean, we can't go back, but there's things that were not an opportunity to others because of this. And I'm just wondering how it would be perceived by.
The end result was zero.
Okay, I accept that.
Once you spent the money, it's just, it was the accounting treatment,
Yeah.
which God knows anybody can understand that half the time. So all due respect.
Yeah, I know the payment. Yeah,
Try to do the right thing by recognising the fact, and one of us at this table probably said we need to recognise this money's been given, and that's how we've chosen to do it. Where in the past we probably haven't bothered recognised, just give them the money. Tick.
And I don't think our ratepayers would want to pay a differential to pay back these internal loans that then can't get spent on anything. So
yeah, I understand that. I'm just, yeah. Okay, I'll leave it.
Okay. No, that's great. Good questions. So where did you go? That one? No, yeah. Next one, is it?
We'll go back to that one.
Yeah. So we'll just go back, proposing to write those loans off because they are within the same governance group, effectively. Hang on, I've got to work out where I'm at. So if we go to the next, that's right. Yep, there. So hang on. No. Next one, that one. Okay, so this next lot of paper, this next sheet provides how we're going to deal with the money that was lent between governance groups. So how are we going to deal with Cromwell? How are we going to deal with the district? How are we going to deal with Vincent? So we are proposing that, and we will transfer back to the appropriate general reserve the following. So Cromwell General Reserve will increase by 1.08 million. So it's going to get back all its internal loans, which means that it will have an extra 1.08 million in its general reserve. We will give the district general reserve will decrease by 393,000, which is, these are the first three of that transaction list I had there. Alex Town Centre will decrease by 87,000. So effectively we're saying let's take it out of the one who borrowed the money and put it back to the lender to get rid of those internal loans. The water debt, we will actually, for the water, we'll raise external debt because it's Three Waters. It will go, yep. Three Waters will be dealing with the internal interest anyway, so shouldn't be any additional cost to the water activity of that. Then the district general reserve will increase by 160k. Vincent Tarbert Street building reserve will decrease by 7. Alex Town Centre reserve will decrease by 28. ANZ Bank strengthening reserve will decrease by 125.
To give a zero balance on each of them.
That will balance them all off and put the external, what I'm calling external money, but the inter-governance body loans back to where they came. So it puts the lender back in the position it was, and it comes out of the borrower's accounts to put it back. So
Have you made sure that you've gone through every one of those and taken all the water money out of it?
There's only one.
the
Water. I guess what I'm saying is some of that stuff has got a water component to it. It can be transferred. to the-
605.
Yeah, but I mean, transfer the debt, that's what I'm saying.
Yeah.
If there's any part of it that's got a component of water in some of those, that's all.
well, if it has, we'll
Find it.
depends how old they are. I mean, we probably wouldn't spend a lot of time looking at that. I don't think it's necessary.
Other than that debt goes away.
The debt, well, apart from the external debt, we are actually creating an external debt, and we are putting the community boards back to the position they would have been prior to the loans.
Just a question, Paul. The Alexandra Town Centre and the spreadsheet was 27,000 and you've got 87,000?
Hang on. If I typed it wrong, that would probably not be a. Alex Town Centre is 87,176 in terms of the loan. It's the second one down.
Town Centre, 27,577, and the one you sent out for me that I'm looking at, or am I looking at the wrong ones?
Two Alex Town.
There are two, yeah,
Oh, down there.
yeah,
Well, that would explain it.
that will explain it.
Because why would you not have two things called the same thing? That actually
I
relates
just-
to two different things. I mean, get with the program.
I was just going to say that to him, but you jumped in.
Well, you've answered my question. Thank you. That's why I asked it.
We've listed it at 28 in the thing because I rounded it up.
No, that's the
So
same.
anyway, so then we will increase the district general reserve by 160k. We'll reduce those three reserves there by the amount shown. And that again puts the district back to where it should be and deals with the other three reserves. So they will be balanced off. That deals with internal loans.
Hang on, I might be being thick here. 87, oh, it's actually there 3 times. That's three times, yes. Right. I've answered it, carry on.
Thank you.
Alex, we've got Alex start.
So are you comfortable with that approach? Because what the plan will be is to go to the community boards at their next September meetings, talk them through exactly what I've talked you through, and then put a paper up to council for the 24th of September to do all this.
Would you mind just having a talk to Duncan and just making
Yep.
sure that there's nothing that we're going to get pulled up on?
Yep.
It might take, yeah, of course, but just, yeah,
Yep, no, I'm more than happy to do that.
thank you.
So if we move to the next page, Wayne, thank you. So we have the closing, and I'm only dealing with targeted reserves here now because the district will take care of itself. It has general reserves it can rate for, and if it's a district deficit, then it can be levied at the district level. So I'm looking at there's $18.25 million in reserves, made up of Cromwell nearly 6, Manitoto just over 2, Teviot just under 1, and Vincent just under 9, and specific reserves of about 3.357. We'll move on to the next one, which is Cromwell. You've seen this separately, so I'm not going to try and get you to look.
Can I just ask those estimates, the 30th of June, that's excluding the ones that you're just going to tidy up.
Yeah.
So that won't be the new number.
These reserves, these will happen at 1 July.
Yep.
So we are going through the audit process at the moment, and there may be some small changes, but it won't be anything that's significant. The internal loans have been factored into
To that figure.
this stuff here now.
Okay.
Well, no, not into that, but into the entries that I'm going to talk about later on.
Now I'm ahead of
Now
myself.
it's starting to get tense.
So if we look at Cromwell, as I said earlier on in the piece, we will leave 3 of these, effectively 4 will be left in deficit. But not in Cromwell, because Cromwell's got a surplus in its grants. So if an activity has a deficit in its grants area, that will stay in that area because there is a rate that is levied for grants at the ward level. So we're going to leave that. We're not going to touch that. Cromwell Town Centre, Cromwell Master Plan and the Memorial Hall, you can see are all in quite large deficits. We're proposing to leave those as well because there is, my understanding is the agreement is that land sales will cover those off and they will occur over time as we start to sell the industrial land. They will be repaid. So I'm not going to do anything with those. They will remain there.
Sorry, can I just ask a question? Were they taken from the money for the Cromwell Hall was from general reserves? As in, or was it from the ward reserves?
It was award based. There was about 22 million in there that was contributed to that. The balance, about 23 million, was going to be debt funded.
Yeah.
And what we said was, okay, how do we deal with the interest component on that 23 million? So we are going to run that as a deficit and put that into the reserve as well as a deficit, so that it will go from 23 to 25 or 26 with the capitalised interest. That's the amount that the land sales will pay for.
They pay that back.
So there will be no other impact on any part of the rest of the district. And I think that was agreed at part of the districtisation hearing. So we followed that through. So if we go on to the next one.
Sorry, can I just clarify which ones you're going to leave? Because
So the ones we're going to leave are the Memorial Hall Cromwell. That's at 3.5 million.
yeah,
The Cromwell Town Centre at 2.38.
yeah,
And the Cromwell Master Plan, because those two are kind of linked, at 893,000.
so what's paying them back?
The sales of Bannockburn industrial land. Because my understanding is the discussions that we've had as part of the LTP process was that because the endowment land can only be used for the benefit of Cromwell, that would be used to pay for that rather than district.
I want to have a close look at why the Cromwell Town Centre is in so much deficit of that amount, because I'm wondering if that was to buy some properties. Yeah, so I don't know that we've done much in the town centre yet to be 2.39 million in deficit on ward funded activities.
Buying properties.
We did buy a couple of properties.
There's now doing a rent return.
Yeah.
There was quite a bit of planning work done with rationale and that, which clocked up quite a lot of money.
The town centre.
It was about 700.
Cromwell Town Centre, Jazzmax and all that sort of stuff.
No, you're well into the mill. From what I,
And there was a
How much
council
is that?
component to that as well, though, because it was done for the road and all that sort of stuff as well, and the parking and that sort of thing.
Master plan, but the actual,
Master separate, isn't it?
the iteration on the Cromwell Town Centre and the many options was a cost to the ward.
Yeah.
And
It was
I don't know,
$700,000.
it was significant.
Memory says seven, it was something like.
I can understand the hundreds of thousands, but 2.3 million is quite a way apart from that.
Was it the development of the bow tie?
No, but there was a lot of, well, there was.
If we spent over $2 million on Jazzmax and bloody rationale and all that sort of crap.
We would know that.
so you've got change out of 2 million, but it's well north of $1 million. Just the research I've been doing, like the bit you mentioned there, Nigel. After that, there was another 370 on the different options that came to the community board.
Oh, okay.
Yeah, remember the 9 and 10 options and stuff that came to the community board. That was
Business
after that
only.
700.
So the discussion we've had about the Cromwell Town Centre that have been here in the last 2 years with a handful of consultants is just shy of $2 million.
Yeah,
Have achieved.
Holy shit.
I
Achieved nothing.
That's
So what we can do is we'll find out what
Yeah,
made
I
up.
think you need to because
But I guess it's the principle, and if stuff needs to be moved out, we can look at doing that 1 July, that's fine. But I think what we're talking about here is the principles of what I'm proposing. It might not necessarily be that exact number.
the long-term plan talked about how we're going to fund the town centre works. So in terms of budget and all those things, it's been covered in that respect. But then the money that then was subsequently transferred to the town centre, to the Memorial Hall project out of there, which was 6 million, was it?
Okay.
Yeah, so I still am gobsmacked that there's been $2 million and it's then gone to a deficit for that.
Yep.
Because there was still a discussion and the LTP talked about it, saying, well, a lot of this is not just about what was then ward funded as to what was district funded. You go and look where the money was going to be spent. It was on the road and the parking in
Yep.
particular, and there was still a conversation made about it. So just be worth looking at because I think that the deficit might squarely actually fit into the council's bucket for their asset.
Okay. If that's where it needs to sit, we can fix that. But that's not, you can see the opening balance. So this is the closing balance, estimated closing balance at the end of June. So it's been there longer than a year.
It's been there for, yeah, but I don't think we've probably quite seen it in a report like this that says, here goes the actual number.
Yeah. So I'm more than happy. We can look at what makes it up and we'll let you know. And if it needs to change, we can change it.
Yeah, because I think it's important to, especially when you stop and look at the Cromwell Town Centre.
Yep.
Most of the assets in there are actually district owned.
Yep.
We controlled the bow tie out the front, and we spent a whole lot of money on that and the car parks, which was funded from the ward. But then we got down to the redevelopment, and most of the cost of the town centre, before even district funding and stuff, were on council assets, buildings, parking.
Right.
So the deficit should head that way.
But I guess the other component to that would be, and this is not just my thoughts on it, if it wasn't going to be funded out of the land that is only available to Cromwell, then the district may have turned around and said, no, we're not doing it. So that's a
My understanding
discussion.
was it was always funded out of endowment land, all the work associated with the town.
No, not endowment land. No, absolutely not.
So let's just look at the number and find out what was made
Yeah.
up.
I'd be surprised if that was the case, and because council probably wouldn't have made it.
No, Gear Ave, they're not endowment land, so
Yeah, no, Gear Ave, quite right, but I'm thinking here of the Cromwell Town Centre. That's not Gear Avenue.
no.
That deficit, that cost of Cromwell Town
That
Centre.
was in the it was in the LTP. There was money to fund it out of rates in the LTP and loans in there. It was not coming from the Cromwell Endowment Fund, I can assure you.
Look, we will check that because the whole purpose of the upgrading of the Memorial Hall and the town centre was that it was going to flow from the proceeds.
Memorial Hall, well, yes. Town centre, no. The conversation about the town centre always was saying these are district assets. They were before we did the district funding. That was quite clear.
Kind of wide out, because the conversation initially started out at, are we going to get rid of the service centre in Cromwell and build a new council facility?
It wasn't the board.
And then it kind of flowed on from there and became just the Memorial Hall because of the money. But there are some challenges around what is paid for and how it's paid.
But the only thing I would, and I'll need to brush up on this, is in that we had the decision making wrong, because the town centre should have always been council there.
It was.
It's bouncing. Well,
As in the LTP is that. And if it wasn't, then
it was
must have
that,
been
but
well asleep.
all the work was being done out of the Cromwell Community Board for making that decision effective.
No, we changed that in the last LTP. We said this has got to go to council.
I know, but all the workshops that I've been associated was always at the Cromwell Community Board, and it was a fait accompli to council.
That's only
So we had that wrong.
only council can blame itself for that, and that has been brought up several times, saying this is council asset. Where's the council?
That's right. Hence, districtisation has
Okay,
caused-
No argument. Totally agree. Should have always been like that for that one.
I don't think it matters in terms of the principles that we're trying to talk
We
about.
won't revisit the fact that all the master planning work for Cromwell was paid for from the ward rates as opposed to the others that got their done by
Let's revisit that at 3:53 because Paul is talking about the principles and we're not in the weeds.
I just making my point.
I will say that I'm really trying hard to get this thing done before 4:30. So
Yes.
this will be on you if it's not.
He's bugging now, so might as well wait till 7.
So you can see at the moment, given the discussion, and we will investigate that, there will be some reserves that we won't be looking at because there are other funding sources for it. There are reserves in there that are in deficit that we will have to look at to tidy up because, as I've said before, there will be no way to tidy those up, given there is now no funding source that the original reserves were created from.
The Bannockburn Community Centre is an example of one that might have been just like the Manitoba Hospital loan, money paid and then recognised through the reserve to be paid back, but not going to be paid back because we haven't controlled the Bannockburn Community Centre for how many years?
That's an interesting one because there's nothing in our loan structure to say it was treated that way. If it was treated that way, it wouldn't be in there, it would be sitting in internal loans.
I can tell you we've never loaned any money. We did an upgrade of the hall out there and we sold it for $1 afterwards. And we paid $100 and something thousand dollars or $200,000 out of the cap. So what I'm saying is that probably one that's probably sits internal to Cromwell and should be written off.
I'll show you how I'm going to deal with those because it's effectively a transfer between the credit reserves and the deficit reserves. It's exactly the same principle.
Yes, cool.
Absolutely. So if you move on to the next one, this is the Manitoba with its 2.1. There are some reserves in there that need to be tidied up, as I say, because there's nothing that we can do with that. The unfortunate thing is that the general reserve in this Manitoba space is also in deficit. So we'll have to work out how that's going to go, but I've got a plan for it. We move on to Teviot, which is the next one. Same principle. These are just listing the reserves. You can see they're in deficit. You can see the, where are we? There's a property, nearly $5,000 in Teviot that's in deficit. They'll all be tidied up in part of the proposal. And we move to Vincent, which has the most reserves, which was the most difficult to try and sort out. It's got significant reserves in deficit, and the big one being the Molyneux pool. You can see it's 1.75 million. My understanding from that was that is operating deficits and the like that were pushed through to that pool. So that's effectively losses to the activity. So that was a problem to try and solve. And then we go on to Vincent reserves continued, the next page. You know, they have 8.9 million, but there's a lot of offsets there. And this LTP that's just gone, even though they have a general reserve of, there's their general reserve, 7.7 million, they have actually committed significant funds to other projects, so it writes those down. So we don't have as much. We don't have $7.7 million.
Community Hub's one of them.
Sorry,
Your turf and Yomahia
Turf, Omacare Hub, and the stadium are the three.
So they've used up 5 million of them.
They've used up effectively. They end up with about 1.1 million left.
So that's just about where you want to be then, isn't it?
That's right, yeah. So if we move on to the next page, which is the proposed actions for Cromwell, and I've listed them by ward rather than anything else. So you see that Cromwell in the internal loans is going to get $1 million coming into the reserve. It's actually then going to offset $1.1 million to its reserves that are in deficit. To pay $277,000 to the Bannockburn Community Centre to balance that out to zero, $48,500 to Anderson Park, Cromwell Pool, $778, and $2,300 to Bannockburn Reserve. So that's comes from the general rate. You also have an elected members surplus in Cromwell. That was where we used to fund the community boards. Now it's all general rate funded. There was a surplus of 27,000 in there. We're going to offset that against the deficit in forestry in Cromwell to the tune of 27. So that balances that out. And as I said, we'll leave the Memorial Hall, the town centre at the moment at that number, but we'll do some investigating around it and the master plan stuff. and that'll be debt funded initially, and future endowment land sales or other land sales will be used to repay those debts and clean that in.
So on that pool one, Cromwell, the pool deficit looks like it comes down $103,000 a year.
Yep.
So what's that coming from? Is that coming from sort of, because what I'm asking is, will there be a corresponding then impact on the rates payable?
That you won't see a 1-for-1 because
It's now district funded.
it's district funded.
Yeah, but and technically, if you missed out the year where it got district funded and went back and made a direct comparison, you find there was a corresponding.
There should be.
Yeah.
Yep.
So what that means is that then the council gets the pool free of the debt. Effectively,
Yes, correct.
and I'm assuming when we get to Alexandria, you're going to show me the same thing happening for there.
Yep,
That the
exactly.
district
Yep.
gets the pool free of the debt that they
Yes.
hadn't paid off, and
Yep.
it has a corresponding impact as well.
Correct. Yep. And then it's the district's responsibility to build up reserves if it.
Yeah.
So that's Cromwell. If we move to the next one, which is Mount Toto. So they're not big numbers here. We're going to take out of the general reserve 6,500, put three smaller accounts. Out of the property, we'll take 72,000 and clean up those three accounts there. So it's not big numbers for the
So-
Toto.
To go transfer the Minnetonka General Reserve into the Minnetonka Halls, how do you determine that when you're trying to divest someone?
If we're divesting them, I think if we divest them, we're not going to ask somebody to take that on. We would
No,
have to.
but I'm saying that you've actually got the money in reserves and then you've asked the community to divest them. And they could have funded themselves.
So hang on, we're transferring from that general reserve, so that is in funds. There's a deficit fund of about 3,000, is it? $3,000 to the community hall in the Maniototo. So if you divested that, you would just give them the building. They would pay $1 for it, whatever the deal happens to be. You would still have that debt sitting in your books in your reserve. You would not transfer the deficit debt to them. If there was a surplus, different story, that might go with the asset.
Or not.
It would go with the asset because it's tied to the asset.
But you got no forestry in the Minnetonka. It's not even the lines. Line item.
Yeah, Minnetonka, where is it?
We haven't got a forestry.
The wind forest.
Sold it.
It's supposed to be tiny, yeah. The little one there.
See, this is the thing. What may have happened if you have sold
But
the
it's not, it
forest?
isn't costing.
I don't know where the reserves went or the profits went for that, but you've got a reserve sitting there of $4,700 effectively.
I said a 5341 Stu Forestry Minnetonka.
So what you may have done is you've sold it, given it away or whatever.
Sold one, it wind blown, but I didn't know if we still had a.
You've got a wee reserve there that's in deficit, yeah.
So,
And that could have been the wash up of the sale and the
Big
likes,
fees.
and we've not dealt with it. Teviot, if we move to Teviot, Teviot's going to transfer 108,000 from its general reserve across those reserves there. Balance of the Roxbury Entertainment Centre will stay as a deficit at the moment because that's money that's been spent after the fire. And that will be covered by insurance proceeds. That will be, so the insurance proceeds will go into that. And then the council will spend money to rebuild out of that reserve. So it should end up at zero by the time the building's rebuilt. And then Vincent, this was a little bit of a problem, to be fair.
Surely you're not telling people from Vincent that we're a problem, are we?
No, I think
I don't think you emphasised that clear enough.
I said this was a problem, not they were the problem. There are some deficit reserves in there. So we are first using other reserves, Vincent, to pay off Molly Park, Pioneer Park, Bexwell, Clyde, and they're all coming out of the same rating space, which was, what were they? It's a P&C rate. So you're allowed to transfer between reserves if the rating source is the same. So that's why we're using other reserves first to pay and get rid of those balances. I couldn't use that other reserve to pay off a general reserve deficit. And then we transfer from general reserve Vincent, 6.17 million. Now you've agreed 4.7 million in the Molyneux Stadium, the budgeted capital, that's in the LTP. You also agreed to transfer for the Yomikau Hub, the budgeted capital. We budgeted up to 1.6 million. Had discussions with Gareth, and the contribution that council needs to make is about 600,000. So there's $1 million available to go back into the general reserve. You've got the Clyde Rec Committee, Pines Forestry, Alexandra Cemetery, 39 to 43 Talbot Street. They are two activities.
Can I go back to the dead Molyneux Stadium? And given, I can't believe I'm going to say this, given that that's 25% district, was 25% district funded, then how right would it be for some of that deficit to be offset across the district?
No, this is the agreement at the LTP level. So this one we've just done was to use Vincent reserves to do the upgrade. So Vincent is 100% paying.
So sorry, it's for the upgrade, not deficit. Okay, right.
Yeah, no, so what I'm saying is I'm taking out the 4.7 million to do that.
Misunderstood.
And then if we go to the next page, we've got continuing to transfer to central stories, the town centre, the Alexandra Town Centre loan. So that's the net, adding back all of those internal loans. So that will increase that deficit.
It has to be the longest outstanding loan this district's ever had.
Yep. So in Valance Cottage, so then that will leave a balance of about $1.3 million in the Roxburgh, the general reserve. 300,000 of that has been earmarked for the Dunstan Turf project. And then what we are proposing is that the deficit of the Molyneux, we will transfer 990,000 to the deficit of the 1.795 million that I talked about earlier in the Molyneux pool. So that effectively leaves us about 800,000 that we have to find to balance that one off. We will transfer from Vincent elected members 32,000 to those two small wee reserves, transfer from Vincent property 78k to pay for the Talbot Street, 37 Talbot Street. Then if we move on to the next page, so we still have one major issue, and that is the 1.795 million for Molyneux Pool.
Sorry, Paul, you confused me. Just I couldn't work out what it was. You said about the balance in the general reserve will be 1.3.
Yep.
And that 1.3 you'll use 300 to go to Dunstan Turf, and then use 990 to take off the Molyneux Pool. So that was
there'll be about 10k left.
Yeah, zero. Yeah, sorry, I thought you said something different than that. It'd be nothing left in the general reserves, and then
pretty much these are rounded numbers, so that's why that occurs. Yep. So you've still got 1.795. What I'm proposing to do is take 990, so just under $1 million, from the general reserve and pay that into the Molyneux Pool. Vincent has an endowment land totaling 706. And the balance of, there's a property general fund that will have a balance of 82.6. And that would then be used to reduce the balance. So it just scrapes in to eliminate that deficit using the balance of the general reserve, Vincent general reserve, the Vincent land endowment, and the balance of the property general fund. And the reason we can use that $1 million from the general reserve is because Yomikau came in at 600k versus.
So hold on a minute though. We had not this last LTP, the one before. There was $1 million put in then. And where did that come from? Remember, I thought it was half and half.
The hub.
The very first one that we did.
Yeah, that's paid. That's
That's
done.
out. That's out.
Yeah,
Okay.
yeah. No, that's done. The hub we're talking about here is what you decided.
Just in the last LTP. Okay, cool.
Yeah. So we just have enough to effectively clean up all of the deficit reserves, with the exception of the ones that we've talked about, and we will have to do some investigating on one or two of them. It then means that we don't have any stranded deficit reserves that we will never get the money back for. Or, because what that effectively means is if you allow community boards then to spend their money in surplus, you're actually overspending their total. Because if they then spent, if we go back, I think, let's pick Cromwell. Cromwell's got like 5.97 million, I think, from the previous slides. If you allowed it to spend its 5.97 million in cash, that's a net position. So it would effectively be overspending its total when all its surpluses are gone. So what I'm saying is its surpluses equal more than the 5.97 million. And you said, yep, we'll fund that, we'll fund that, we'll fund that. Effectively, you will end up with overall deficit balances in each of the community boards potentially. So this cleans it up, effectively resets the reserve balances again from a district perspective, and the district can then go ahead and fund whatever reserves it wants to fund from a district-wide perspective, rather than, we're funding swimming pools now, but we've got 3 ward-based swimming pool deficits or whatever it happens to be.
We're not going to have them anymore.
Can't fund anymore.
Yeah, that's what I mean. So we're going.
That's quite an elegant solution.
Thank you.
So which ones will be left in surplus?
All of the ones, what I'll do is I'll do another sheet
Before and
just before and after, yeah, to see where it's coming from. So effectively, pretty much most of the general reserves get tidied up. The more specific reserves like the Clyde Hall, or, if we've got those types of funds, they will still be intact, and they will continue to be intact until the next page, Wayne, where we talk about reserves and surplus. Now, reserves will be in surplus at ward level that cannot be readily utilised now due to districtisation. It is proposed that when funding is required, the relevant ward reserve is used, e.g. if we do a project or capex or program of work that's approved, for argument's sake, the Ranfurly railway station, which has it's got a wee balance in it. Or just 1 minute while I find it. The Ranfurly, where are we? Ranfurly railway station has $53,000 in it. So if a project came up that was to, let's say we had to earthquake strengthen it, for argument's sake, and it was going to cost $200,000, what we would do is we would utilise the ward-specific reserve first. So that would put $53,000 towards it. And then the district would pick up the balance and start funding if it wanted to replace it or whatever. So it kind of eliminates the need, the continued need to replenish reserves at a ward base, but it still gets to use the ward reserves for the purposes that they were intended for.
That gives effect to the whole concept of district funding.
It does.
At the end of the day, the ward's got the money, sure, but it was for that purpose.
Yep.
If now someone else owns that purpose, why wouldn't you put that to that use? To do
Yep.
anything other, do anything other than that, well, probably is not lawful for a start.
Yep. Exactly.
It's not, actually.
That's right.
So
Yeah, you're
probably
right.
it's not lawful because it was going to be used what it was collected for.
Yep.
And now we're paying for it anyway, and sometimes you're paying less and sometimes you're paying more because of the district funding.
So effectively, if you think about the reserves that are in surplus, and I'm going to put this in air quotes, they're your endowment reserves. They can only be used in the area that they relate to for the purpose that they were created for.
And that's by virtue of legislation
Yep.
and common sense and logic.
Yep. So that is what I'm proposing, is that as we go through these things and when projects come up that need funding, first port of call, if it fits with the reserve purposes, we use the ward-based, with the exception of general reserves, because they sit with the community board and the community board would deal with that themselves. But if we're talking about the railway station or whatever else we have.
So if I look at the Cromwell page.
Yep.
The spreadsheet, the reserves contribution fund would
Stays where it is. We're not touching
the
the
resource consents. The promotions would stay. The Bannerman Community Centre is gone. The Memorial Hall stays and becomes due course. The sports pavilion stays. No, it would go, wouldn't it?
Sorry, the one.
Sports pavilions.
Yep,
That
gone.
would go. The Paris Community Centre's gone. The museum's gone. The resource centre building will be gone. Anderson Park is gone. But the reserves stays. Cromwell Reserves account. Yeah.
Yes.
Hall's gone. But then you get to the Athenaeum Trust and those specific ones, which they stay obviously.
Yep.
But just be useful when you do your report when it comes is that something like the Athenaeum Trust.
I'll put
No one will know anything about that.
the right name.
And if you don't get it right, the past Mayor of Cromwell, Peter Mead, will get you right very quickly. I can promise you.
Thank you, Paul. Thank you, Paul.
Yeah, so that I guess you just do something like that spreadsheet showing opening, closing, adjustment, new balance. Yep. Makes sense to me.
Yep. So the other part of that is we would not add any further funds to ward reserves because we can't really do that.
Yep.
With the exception of the grant space because that is targeted. What the expectation would be that the district would pick up the requirements to create reserves. So it would potentially create a swimming pool reserve rather than the Roxburgh swimming pool reserve. So all swimming pools would get the benefit of that reserve if it was needed. And that was part of the benefit of going to districtise everything, that you effectively get the whole district to.
So what you outlined here is dealing with history.
Yep.
And now with districtisation, you've got an elegant solution that'll take care of it. What happens going forward where, particularly in Cromwell's case, where you've got such a huge potential asset and realisable asset in the endowment land, how is that going to be handled? Because just as you're saying, you can't.
Yeah, I know what you're asking. I know what you're asking because what you're saying is that gets limited to the Cromwell.
Well, you've already committed 45 million and interest to the Cromwell Memorial Hall.
But the problem is, and that's if that were done with a clean sheet of paper and Cromwell decides, because it's got the money to do it, from endowment land, instead of building let's say a $10 million hall, which would it's now built a $45.8 million hall.
Is it?
And but all of a sudden, the operational costs of that hall should, on a smaller hall, maybe only $1 million a year, are now proposed to be $2.3 million a year, which is being paid for district wide. So you've got endowment capital used in a ward that is that once a project is, and I suppose you could look at the town centre, or who knows what the imagination can dream up as a capital project. And yet, no, we're paying for it ourselves because it's endowment land and da 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 da. But all of a sudden, the operational cost is far more.
Essentially, the endowment land becomes
Liability.
you guys are hamstrung because of it, because the rest of the community
So I can, and
they're happy about paying the operational costs of
I
things.
think it will be because the council ultimately has to exert its control.
Oh, yeah,
And that's been the issue in the past, is this council has been reluctant to ever do that. And we're going to end up now in a situation where this council is going to have to say, before the Cromwell Endowment Fund gets spent on doing whatever it's going to be, something that's going to cost the district's going to say no or yes. And if it says yes, it says we know what the impact's going to be, or we know how we might going to be funding it. And it might not be from rates from the district.
sorry, Sue, Problem is, it's just a huge amount of money, potentially, that it overwhelms. I mean, it'll just be sitting there like, Jaxie, what do we do with it?
Your streets will be paved in gold and the rest of us are in chip seal.
I mean, you and I had that discussion, and the last time we had a meeting here about that and talk about the endowment land, and we should be, if a fair and reputable, administer that endowment land for the cost of the ratepayer.
I don't think we have to resolve it now, but
No,
it's a valid point.
But that is
I
a very
think
valid point.
The mayor in a few years' time and the chief executive will be writing to the minister.
Ultimately, it's going to have to be, because you can't keep that inequality out there forever, because it will be say, I've got all this money and short of paving my streets in gold, what can I do with it?
Yeah,
But should have been
effectively
situation
what
to be in.
will happen is that will become a stranded reserve because the district's picked up everything else.
Yeah.
And you can't use the income from that because you're applying it. You can't differentiate between benefit Cromwell receives, because it should only be used for the benefit of Cromwell primarily, rather than the benefit of the district. So you run into those problems. So potentially, given in 9 years' time when the developments happened, and because we're showing it in the LTP as $100 million in cash in the bank, what you potentially could have is you could have money sitting in the bank, but because you can't use it anywhere else, you've got to go and borrow to do projects. It doesn't make sense. I guess the other thing is this part of it is a transitional part. What we decided on was the capital would be paid for from endowment land. The operating costs have been factored into the district, so the district's picking that up, and that's just a transition that you probably wouldn't ever face again, given the fact that the council now has.
We only faced it because of the cost overrun in the hall for a
Well,
start.
no, I think you only faced it because you, haven't I put this politely, community boards had more say on their fiscal
Balance sheet of the
outcomes than the council wanted to or had. So.
Well, you could take the view that the council let that happen. Sorry.
Yes, exactly. Yeah,
Sorry, council let that happen.
Yes.
And could have easily controlled it at any stage, chose not to.
Yes, that's a better way to put it.
Yeah.
Yes.
And hey, that's what it was. And if the world hadn't have changed, they
Yeah.
could have carried on for a long time. Perhaps.
That's right. Yes.
Other things were brought to
And
bear.
now
Now
it's
changed the playing field big time.
So what you said before in terms of if another project like that came along, it wouldn't just be the decision of one community.
It has to be the council first,
District.
and then the committee look at it.
Yes.
What's the
So,
Royal Hall
we
and
covered it.
surprise the council said?
Next page, with two more sheets.
Starting to draw this is fun.
Make it count. We've got to put the karakia in there as well.
That's before I start, technically, Madam Mayor. So what's happening next? We'll go to the next round of community boards if you're happy with what you've heard. And I'll do the same thing with the community boards as I've talked to the council about. Then once we talk to the community boards, it will be putting a paper up to council for your final meeting for you to either agree or disagree with dealing with reserves and internal loans as I've described them here. And that effective date will be 1 July. So we will be able to audit up to 30 June. 1 July.
So 1 July this year.
Yes.
So be retrospective effectively.
Backdate it to 1
makes
July.
sense. Yeah.
So we're in the same financial year that we would start from. Same as districtisation rates. Next slide, Wayne. Shouldn't be any questions,
I haven't got any.
but I'm happy to take any if there are.
Well, can I say, we've always known, and even in my limited time here, that these reserves, we had to get to grips with our deficit accounting. So it's been a work program that's just, and we couldn't keep ignoring it. And now with digitalisation, we've had to resolve it in the financially prudent accounting way. This is their recommendation, but it does resolve an issue for us that sort of has been an issue for us for a very long time.
Thank you, Paul, for counting all the beans, jelly beans.
I was a little bit worried when I couldn't find $1 million. That was going to be a problem.
Yeah, but you found
Yes, I came to the rescue.
This is my left hand, this is my right hand.
Yeah. So
Right,
So that's
thank you. Good path,
Thank you.
Jen. Right. Would you like to take the karakia, Peter?
Yeah.
Unless there's someone who's that.
Kia hora te marina, kia whakapapa po nang te moana hoi rahi mā tātou i te rangi nei. Aroha atu, aroha mai, tātou i tātou kata. Iei honge, hu, tai. Long day.
Okay, thanks guys.